So hello everyone, my name is Anmol Bajracharya. I'm a kernel developer in Wolfram Research, and today I'm going to give a talk on backtesting trading strategies in Wolfram language. I'll be using various time series processing function to do it. So why do we need backtesting? So backtesting can help investors and traders to test their trading strategies before they go live in the real time. So it will help them, it could help them to determine, if their trading strategy is profitable or not, right? So in this talk, I'll be using financial indicators and other time series processing functions and historical data of the stocks that will be used for trading to do backtesting. And before getting into backtesting, I want to talk a little bit about trading and what do we need to trade and how the trade execution works. So whenever we want to buy and sell stocks through a broker, we need a brokerage account. And through a broker's account or broker, we can get access to a financial markets where we can buy or sell stocks. So we do not have access to financial markets directly, right? So even if you're trading through a trading app or through a trading app through mobile or online application or desktop application. So you need to have a broker's account. So when you place a trade, what happens through a trading app? So once a trade is being placed, it goes to brokers, right? And then brokers have their order room, and brokers have an option to send your orders for the execution to various markets. So there are mainly four markets. Say for instance, it could be either a stock exchange like New York Stock Exchange, or market makers like NASDAQ, or if it is a limit order, then you can also it can also be sent to electronic communication network, which is basically a trading system where the buyers and sellers can uh, their limit orders can be executed in that platform. And the other option is going to be the brokers have their own inventory for executing the trade. So they don't need to send the orders to the markets for the execution. So they can just internalize it and then execute the order by themselves. So that's how when you place a trade through brokers, it's going to be executed from a high level. So whenever we want to place an order through an app, then what we need to specify a few things. Like say for instance, you have to specify a ticker symbol on order side. You instruct the app to either buy or sell, and you also need to specify the order type. So it could be like a market order, which will execute immediately, or limit orders, stop orders, or stop limit orders. And you also need to specify the quantity, like how much you want to buy and how much you want to sell. So that's sort of like an order specification that you need to provide. So for backtesting, right, we need a trading strategy. So so what is a trading strategy? And we can think of trading strategy as just a rule that will tell you, like how much to buy and how much to sell, and when to buy and when to sell. So from in a simple terms, you can think of trading strategy like that. So when we want to do a backtesting, so this is sort of like a process. So we will be getting a historical data, and then that historical data is going to consist of prices. It could be open, high, low, close, and using that data, we'll be computing a technical indicators, and using that technical indicators, we will be generating buy and sell signal. And once we have a buy and sell signal, then we will generate an order specification based on our trading strategy. And once we have order specifications, that orders can be executed in the market and or like in a backtesting framework. And once we have the order execution, you have to update your positions and eventually update the portfolio value. So that's how the whole process of backtesting is going to work, and that's what I'm going to demonstrate in this talk. So I'm going to be using 4 stocks in my portfolio. So that is going to be Zoom, Peloton, Tesla, and Nvidia. And for benchmark, I will use Vanguard Growth Index ETF and S&P 500 ETF. And the backtesting is going to start from January 1st, 2019. Okay, so let's go to another slide. Okay. So first of all, we need to get the data, right? So to get the data, we'll be using a financial data function, and I'll be downloading the adjusted open, high, low, close data from using financial data, for all the tickers symbols that is here, like in a portfolio and in benchmark. So this is already been downloaded, and it will return us a time series. Like here, when you evaluate Zoom, it is a time series, and you can access the various properties that is available in this time series by using these properties. And the value dimension is 5. So when we are downloading adjusted open, high, low, close, we get like open, high, low, close, and volume. All of them are adjusted, and it is going to be a multivariate time series. And using a path component, you can split them into whatever data we have downloaded using financial data. You can also access these this information using either meta information or using a financial property. And to extract each components, you can either use like a path component like this, or like I have defined a simple function called get financial property, which will allow you to get the specific components by just providing the string like this. And in this and over here, all I'm doing is I'm extracting the adjusted close price for all the ticker symbols. And this is the graph so it basically shows you what happens if you invested $1 in each of these tickers, and it will tell you the evolution of the $1 value over the time. So for backtesting, I need a trading strategy, and there are like few assumptions that I'm going to make before doing actual processing. So first of all, like so we can assume that the broker's account that we are using is just going to be a cash account. So you will not be allowed to short sell. That is something that you do not own. You are not allowed to sell it, and you will not be able to borrow money from a broker to buy a stock, even if you have a buying signal. So those are the two restrictions. And at the beginning of the backtesting, I will assume that we do not have any positions. So all the positions for 4 stocks that I'm using in my portfolio is going to have a 0 quantity, and transaction fee is also going to be 0. And here I'm using a daily data. So it is, it is the daily data. And for order types, I'll be using a market order. So usually market order is executed immediately as soon as you place the order. And then for execution, it is assumed that once the order is placed, then the execution happens the next day, and the execution price will be the adjusted open price. And for generating the buy and sell signal, I'll be using adjusted close price from the time series. And the trading strategy is basically going to be using 2 moving averages, which will be used to identify the upward trend and downward trend. And whenever the upward trend starts, you'll be buying 10 shares. And whenever the downward trend starts, you'll be selling 10 shares of the stock. So that's how the trading strategy is going to work. So before going into the details of how this trading strategy can be applied to all 4 stocks, I want to go through a single asset so that I can show the process. So here I will be computing 2 moving averages. 2 moving averages, it's going to be simple moving average with the longer and shorter period. And by using that, indicate the time series I'll be using a crossovers to identify the upward trend and downward trend. So here, all I'm doing is using a financial indicator function, and I'm computing the time series of the simple moving averages for shorter and longer periods. And when you visualize this, um, we can see that this blue line or the blue plot is a short-term moving average, and then the orange line is a long-term moving average. And for the trend that is upward trend, we can see that the short-term moving average is greater than the long-term moving average. And for a downward trend, we can see that the short-term moving average is less than the long-term moving average. So this is same as, like, say for saying upward trend, if you take the difference of these two signals or these two indicators, then for upward trend, the difference is going to be positive, and for downward trend, the difference is going to be negative. So this is exactly what's doing. So for all the upward trend is going to be above zero, and then all the downward trend is going to be below zero. And so the goal is to figure out, like, what is the starting point, right? What is the starting point of upward trend and downward trend? So how do we do this? So I'm using like a time series map function and Boolean to convert this time series or this signal into zeros and one. So once you do this for upward trend, you can see the plot is going to be like this. So here in this plot, all the values or the places where there is a value 1 is showing that it is indicating that it is an upward trend. So here, like, say for instance, in this plot, this point here would be the starting point of the upward trend, right? So now how do I find this point using this time series, let's say upward trend signal? So if you take a difference of this time series, if you use a difference function, then you can see the plot here like this. It's going to give you, for at this point, it is going to be 1, and then the other points is going to be 0. So here in this time series, when you plot it, all the location or all the dates that has value 1 is where the upward trend starts, and we will be ignoring the values the values that is 0 or -1. So we can just do that by using case functions and date path, and then you can extract the dates here. And by using, once you have the dates and you have the time series for the closing price, then you can just extract the values here like that. And this is the visualization of the adjusted close price and the dates where you have to buy and sell. So all the things that I just described can be put together in a single function called a signal crossover. All you have to do here is you submit you provide the short-term moving average, long-term moving average, and the compare function, and it will generate the trades, the dates. So now we are ready for applying this to all the stocks. So in my portfolio, I have 4 stocks, and I'll be using the same the periods for computing the moving averages. So all I'm doing here is I'm extracting the adjusted close price for all the ticker symbols that is present in my portfolio, and then using financial indicators, I'm going to compute the simple moving averages for short term and long term. All of these are in association form, and then by using a signal crossover, we can generate and buy and sell dates, which are also in the form of association. So once we have this buy order dates and sell order dates, then we will use this information and our trading strategy, which is basically buying 10 shares of stocks and selling 10 shares of stocks. And as I said, I'll be using a market order to do that. So if you feed this information to this generate order specification function, then it is going to give me a time series, which so if you investigate this, so you can if you look at the meta information of this time series, it is going to give me the order dates, ticker, order size, and such. So you can see this information in grid nicely here. So this is so this table basically shows you the order specification, and all the information is sorted based on dates. And then like say for instance, if you have buying or selling, if you have a multiple orders on the same date, then what's going to happen is selling thing is going to take precedence. So selling is going to be done first, and then buying is going to be done later for the same date. So that's how the order is going to be processed. So as I said, like, for this talk, I'm just using the market order. And this is the logic for executing the market order. And I'm going to go briefly through this one. So at any time, right? So we can have a position either positive or zero, because we're not allowing a short selling. So we cannot have a negative position on any assets. So if we have a long position and then I have a buy or sell signal, then say for instance, if I want to buy 10 shares, then what's going to do is I'm going to have to check my cash. Do I have enough cash to buy 10 shares of stock? So if I have enough cash, then yes, my order is going to be fulfilled. If I do not have enough cash, then what's going to happen is either there's two options. So either it's going to be canceled or it's going to do a partial fill. So like, there's this option should be provided, in the market order, executing market order. So either if you specify partial order is going to be allowed, then what's going to happen is like, it's going to use all the cash to buy as much as possible, as much as stocks as possible, right? So that's how the buying thing is going to work. And for selling, it is going to check if you have enough shares to sell. If you do have enough shares, then the order is going to be executed. If you do not have enough shares, then the order is either going to be canceled or partially filled. So partially filled here means like you're just going to sell, let's say the order is to sell 10 stocks and you only have 5, then you will be just selling 5 instead of 10. So that's how it's going to work. And when you do not have any position, and if you try to sell it or you have a sell signal, then it's not going to do anything, because like you're not allowed to do short selling. But whereas if you want to buy, then if it's gonna, the logic is the same as I just described earlier. If you have enough cash, you'll be allowed to buy, and if you do not have enough cash, then either cancel or partial fill. So that's how the market order is going to work. And this logic is implemented here in this execute market order function. And here for execution price, I'll be using the adjusted open. This was discussed in the assumption. And for the execution price, I'll be using the open price, and you feed that information, the buy dates and sell dates, or order specification portfolio, and you evaluate this function, and it's going to give you a association of position quantity, average cost, transaction quantity, and cash value that you have. So so this is just going to be association, and each association is going to be has a value of association that's with the different key values of the different stocks, like this. So once we have this order specification, or order, after the order is executed, then what we need to do is we need to update the position value for each stock, and as well as like in the portfolio value. So let's say we have an asset, n assets, right? And at each time t, the portfolio value would be the amount of cash that we have, and then the position value of each assets that we have for that time. So the position value can be computed using valuation price and the position. So basically this is just the quantity of a stock that we have. So this logic is implemented here in update portfolio. All you have to do is you have to provide how much cash you have. This can be, we can get this information from order execution object that I just evaluated earlier. And then position quantity is also going to come from order execution. And for valuation, I'm using the adjusted closing price. So once we execute this, it's going to give me position value, position quantity, portfolio value, cumulative profit and loss, and cash. So this is the visualization of the execution, the backtesting. So here we can see that, okay, you spend $50,000 in that strategy for 4 stocks, then at the end of this year, or like in 2 years, you almost made like $25,000. And this is the cash, this is the cumulative profit and loss, and this is the position. So here, this position value and quantity is kind of cramped up. So if you want to see this individually, then you can also use the depth plot, and I think I used key map value to get this plot. And then, so this is for a quantitative position quantity of all the stocks, and this visualization is a position value for all the stocks we have. So here, what I'm doing is like I'm comparing the my portfolio value with benchmarks. Say, for instance, if I was investing the same amount of money in S&P 500 ETF or Vanguard, growth index ETF, then how is going to compare with our portfolio, right? So this graph basically shows you that, and it looks like the strategy, which is blue line of our portfolio value, is not doing very well compared to Vanguard. So I forgot to mention in the beginning that the strategy that I used here is just for a demonstration purpose. So, it's not optimal, and the parameters are not, parameters are also not used for optimal trading strategy. So it's just for a demonstration purpose. So, but, once we have the portfolio value, you can do all kind of analysis, risk analysis, and yeah. And this is going to be, this is the profit and loss of our portfolio. So I think that's, so that ends my talk, and let me see if there is any questions. Are these financial indicator options and all? The thing is, okay. I can make this notebook available. Right now it is not, I have not posted this, but I can make this notebook available, yes. And yes, the financial indicator functions, the options are not available right now. They are not documented. I'm just, most of this stuff are not documented yet, and still, we have to do a lot of work for coming up with a complete backtesting framework, and we're still working for it. Are there any more questions? Yeah, notebook, I can make it available, and I might even post a simpler version of another notebook, which will actually show step by step on how I implemented, like, the functions, like, because there were some time series processing manipulation I had to do for instance, executed market order and portfolio updates, because the time frames for all the stocks were not the same. Like, say, for instance, this Zoom and Peloton, they just started trading, I think, not too long ago. I mean, maybe last year, but not from January 1st for sure. Yep, I think that ends my talk. And if there is any questions, then feel free to send an email, or yeah. Okay, so there was a, does running this notebook require connection to any external subs? No, it does not require any external database. It's just using, for financial data, it is just using the financial data function in Wolfram language, and that's it. And for generating all these signals, I'm just using already built-in time series functions in Wolfram language. Okay. I think that's it. Thank you, everyone, and stay safe. Bye-bye.